All right, we're back and we're live. We got that issue sorted out. Let me go ahead and post this new link. Okay. Upcoming. Hopefully, I'm not sure if everybody can find me from here. Give me 1 second while I share the new link for everyone. Okay, cool. All right, Paul, you found me. Awesome. Yeah, this is the old link. Okay, cool. Cool. Everybody is finding this. Good morning. Good morning. Yes, I had some issues. As I said, I'm not, in the normal spot. I'm not kind of at my normal location at my desk. Hopefully everybody found me okay. I'm glad that you guys are locating this stream. Um yeah, there were some issues, and it's funny because it turns out that this annoying webcam, I transported it with me. All it had was a cover over the lens. So we're good now. I appreciate you guys for working with me. Ready to dive into what we got going on this morning. We got the first day of the challenge. Super freaking excited for that. We're going to go absolutely in learning stuff to not only upgrade our day trading bag, upgrade our swing trading bag, and our ability to find trades, but also to upgrade the confidence when you're executing trades. So I'm super excited. We're going to get down really in the weeds with this one. We're going to be in the charts, but we're also going to be explaining things in a very simple and cohesive way. It's going to fill in a lot of blanks, especially for people who might be struggling to execute. So I'm very excited to kick the challenge off today. If you haven't signed up, I don't know what you're waiting for. Get in there. If you're not seeing the results you're wanting to see, if you're, just getting started, this is something where we can meet you where you're at, but you just have to show up, right? At the end of the day, you're not going to get the results that you want spontaneously or magically. You've got to be in the room where change happens, and that's how you affect that change in your life. So super excited to get into that tonight. We kick that off from 6 to 8 p.m. Very pumped. And let's see here. If you're excited for the challenge, throw a 7 in the chat. Very excited for what we got going on tonight. I'm working from like completely different system here to make sure that I'm effectively set up for the challenge. So I'll do that, getting used to whatever I need to here this morning. I'll do that before we get started tonight. But let's dive into the news that we got going on right now today. Our first headline here, retail conundrum. So another key to defining the current economic landscape is on display this week with earnings calls from retail heavyweights, Walmart and Home Depot. But like most economic indicators these days, they came with a mixed bag of full of solid trends and worrying stats, as well as vague commentary about consumer resilience. It's also making it difficult to predict shopping behavior for the remainder of 2023, resulting in some muted and uncertain outlooks. So, in terms of what was on the move, Walmart fell as much as 4% after getting cautious profit guidance for the year ahead, but shares ended the session in the green as investors focused on its earnings topper, strong comparable sales, and dividend boost in the macro environment. Home Depot also slumped initially, but the stock stayed depressed and eventually closed Tuesday down 7%. While earnings beat consistent estimates or consensus estimates, sales came in short, and disappointing guidance for fiscal 2023 was not enough to counter a big dividend raise and bullish analyst commentary. So uncertainty was also a common theme on the earnings call. Just take a look at the transcripts and follow-up interviews. We do see a unique environment with many cross currents right now. Customers are still spending money, but balance sheets are continuing to get thinner. The savings rate is roughly half of what it was at pre-pandemic level, and we've not been in a situation like this where the Fed is raising at the rate that it does. Again, and that was from executives at both Home Depot and Walmart. So again, we're seeing a novel set of circumstances, a new set of circumstances that the market hasn't seen before. When it comes to the consumer landscape, the economic landscape. We have credit card debt at all-time highs. It's something that I was talking about in January, right here on the Premarket Rundowns over on Instagram, but still in this session, talking about how all of, the bubbles that existed are being deflated and blown into just a large consumer debt bubble where we've got people with, outrageous amounts of credit card debt, and we've got household savings at all-time lows. So this is just another instance of these retailers now coming in along with banks who have the most cash reserves possible, right? That's what they were saying during their earnings calls, is that they're stocking up on cash. Why? Because they're starting to see signs of increased delinquency rates. people not paying back their debt, people not paying, back their credit cards, all that stuff, right? Which is natural after you having to spend an extra few $100 every month for over a year because of inflation. That's what the average American families had to do. So now, you're seeing people that may have had money saved up. They don't have that anymore, and that's why it's so important for us to continue to do things. Like have the Market Blueprint Challenge, where you can take the money that you have and find easy ways to enter easy trades that are high probability, 90% of paying off, and then make your money and dip, right? That's why it's super important to have that information now. That's why I was trying to do that as soon as possible. I'm so glad that today is finally the day, because this is the information that people need. People are, kind of drowning in debt, and then they don't have the savings to pay it off. What does that mean? That means you need to take the money that you have and make it work. You need to make it do backflips and come back and support you, right? Because at the end of the day, you got to expand your means. You can't budget your way out of debt, right? You need to be able to expand your means to get out of this, to get out of, if you're underwater, if you're struggling, you've got to expand your means to do that. So make sure that that is what you're working to do. But we see here again across these earnings calls from these big companies. Again, don't take earnings as just little anecdotal evidence like, oh, sucks for Walmart, sucks for Home Depot. Listen to what they're saying, right? They're telling you things that are supporting what we were talking about to start the year. So what happens if we get yanked back down into the bear's cave? You've got to be ready for this, because the writing was already on the wall. Right. That's why we're going over what we're going over in the Blueprint Challenge, where we go over literally the blueprint to a bear market and the blueprint to a bull market, so that you can look at things and understand automatically, okay, this is where we're at within the scope of things, right? This is where we're at. This is what step we're at. This is what I need to be doing next with my money. Now, in terms of what's up next, the earnings parade continues today with quarterly results from TJ Maxx, ticker TJX, which Seeking Alpha contributor Justin Purohit currently calls the best bet in retail. I don't doubt it. You guys know whenever there are recessionary pressures, people like to go to discount retailers. They're coming off the holidays, so this is their quarter four, earnings report. So TJ Maxx, might have seen an influx in shopping and revenue because of, people who normally might shop at, maybe a slightly upper level retailer are pushed back down to your discount retailers. That's why you see Dollar General, Dollar Tree, and all these discount stores really, really thriving during these times. So TJ Maxx might be a good bet here. We'll see. Keep in mind that while the S&P Retail ETF, whose ticker is XRT, so it's basically a basket of retail stocks, it stumbled 5% on Tuesday. The industry gauge has climbed 13% year to date, which is nearly triple the 4.5% advance of the S&P 500. So overall, right, we got a number of retail reporters coming in overnight. HD was something we were looking at yesterday. Should have been looking at Walmart, because Walmart held up the best, right? But HD was something where it had the chance to kind of have a payoff, like what we did with Meta back when Meta had earnings, and we absolutely hit it out the park with Meta calls. One of those things where trying out that post earning strategy didn't quite work out for HD, right? Lost some money with HD. It's one thing that's guaranteed with trading is that you're going to win some, but you're most definitely going to lose some. Like for anything, doesn't matter how good you are, you're going to lose some. But then we bounced back with some near 100% profit on SPY puts intraday, and that was the major play. The HD, I called out like, hey, check out this Home Depot size low. And I don't normally say that. I was like, hey, size light until this is confirmed. So you got the heads up, right? You know what it is going into it. But those SPY puts were full size, so they were able to keep us, nice and green for the day, which is all you want to be. Especially when I wasn't looking to do much. We had a nice, just gradual sell-off where I said if we lose that opening price on SPY, we're headed lower. We headed exactly to those price targets and closed above the level that I said was going to serve as support. You can't get much better than this, but how do you get your level, your stock reading, your chart reading levels that upgraded? It's by adding to your bag, right? Adding to what you're doing. You don't go to the grocery store most often and get one thing, right? Because you're not equipped. It's the same thing. You don't learn one strategy, take one course, extract one means of information, then say, oh yeah, this should be good for me. No, like you need a well-balanced diet. You need a little bit of this, some short-term moves here, some longer-term moves here. You need all of that together in the basket, in your tool belt to make you effective out here in these markets. Otherwise, you might struggle. And the most important thing too is to expose yourself to enough strategies until you find the one, right? Trading is a lot like dating. You date around until you find the one that you want to hold on to forever. There are certain strategies that people do that are super simple that make them hundreds of thousands of dollars. There are traders that have been trading for a long time that use these simplest strategies and they still do great for themselves. Find the strategy that works for you, stick to it, and keep it pushing, right? But a lot of people say, oh, there's 1,000 different ways to trade. I've tried once. I didn't really like that. So I guess I'm done with this for life. That is not the right way to be looking at it, right? You need to be going around and soaking up all this info saying, okay, there are all these different strategies that I could do. Which one fits me? My work schedule looks like this. What time do I have? Do I need to make all my money in the first hour of markets being open? Okay, cool. How do I do that? Do I need to make all my money on swings and long swings? Okay, cool. How do I do that? We're going to go over an absolutely amazingly mouth-watering way to make money on swings in the Market Blueprint Challenge. So you guys are going to learn that, right? Very simple, very easy. Um, and I'm going to be introducing a tool that you can use on Trading View as well. I know a lot of people use that, so I wanted to mix some of that in there. So I'm getting ahead of myself, but man, I'm excited to get into what we have going on here because you just got to find your niche. You've got to find your groove, and once you do, you're good. But a lot of people don't explore long enough to find their groove. It's like the same thing finding your passion. They go, they get a job that pays, and they hate it, but they're like, hey, this pays the bills. I'm just going to live my whole life passionless and make money and eat and poop and die, right? I don't want to make money and eat and poop and die, right? I don't want to make barely enough money and eat and poop and die. I want to make sure that I'm like living passionately and I'm doing something that I like. It's the same thing when it comes to these strategies that you execute in markets, right? You don't want to be rinse, repeat, rinse, repeat. You want to be like, okay, wow, I love this. Like I found the thing that fits me. It works perfectly for my work schedule, works perfectly for my availability, for my risk tolerance. And it's a beautiful thing when you finally reach that strategy, right? In terms of counting the minutes, stock index futures were little changed overnight after the S&P 500 tumbled 2% on Tuesday to mark its largest down day since the December FOMC meeting and erasing all of its gains for February. Just like that. Boom. Gains are gone. I said it. People get caught up in the green. They think, oh, the market is easy again. This is so nice. I'm so glad that things are easy and that the market is back on, bowling with the bumpers up. And then what happens? The green stops. That's how they go. No bull market is straight up. No bear market is straight down. You will lose it all if you don't have the blueprint. Every single time. You can say, man, Adam, this is amazing. These past few weeks, I made 60K in the market. That's awesome. What are you going to do with that over the course of the next few weeks? Are you going to pay yourself or are you going to give it all back, right? Are you going to be that person who isn't paying attention to the charts and just buying every dip and it doesn't end up working out? Like you've got to have a plan. Otherwise, your money will always reset to the mean, right? It will always reset to the mean of your mindset. Wherever your mindset is, it doesn't matter. If your mindset is here concerning the money and your money goes up here, eventually it will make its way back down here, right? Every single time. Why? Because everything regresses to the mean of your mindset. So you've got to make sure that you're elevating your mindset and not giving money back. Because once you understand how markets move, you understand that it's not just straight up. So you don't get caught with your pants down, right? When we turn around, because we inevitably have to, right? It's ebbs and flows, it's accumulation. But the accumulation has to happen. So let's see here. In terms of quotes, all eyes will be on the release of the Fed minutes today as markets look for guidance on policy going forward, said Deutsche Bank's Jim Reed. However, it's likely to feel a bit dated as a lot has happened in the subsequent 3 weeks. The slump in equities has followed a sell-off in the fixed income side, with the 10-year Treasury yield returning to the 4% level amid hawkish rhetoric from FOMC policymakers. The Fed has emphasized that it would be data dependent, but the question is, what data and if it really trusts the numbers. So that's going to be the big piece of information that markets are hinging on today. Fed minutes at 2 p.m. That's what we're going to get, right? Once that information comes out, we will see volatility. I don't think Powell is speaking. We haven't gotten any information on Powell speaking. So I don't think Powell is speaking. So that's one less thing to worry about, right? Quite frankly. But that's still going to be something that markets are kind of hinging on, waiting on that information. The only thing that we've gotten out of, the Fed and everything is really just we're gonna make decisions based on the data, and we're going to do this based on the data. They've played cards close to their chest, so we'll see today kind of what decision they make in terms of interest rates, and that will likely determine our direction here as we continue to bull flag. Right, we've still got the bull flag in the daily bull flag intact. right? We are still technically bullish, even though for 2 weeks we've been chopping slash selling. We're still technically bullish. It's important for you to know that immediately when you come to markets and not look at markets like a new day, right? Everything is a new day. It's a new slate. No, right? We come in here with a battle that's going on, and there's a certain point in which someone or winning is winning or losing that battle, or someone has control of that skirmish, but the larger war is in control of the hands of this person. You need to know that each and every day you step foot into the market. Otherwise, you're really selling yourself short, and you probably won't make money. In terms of coffee news here, if you haven't had your cup of morning Joe, I need some tea in me personally. Meet Oleato, so olive oil and coffee. It's alchemy, noted legendary Starbucks leader Howard Schultz before the company unveiled its new game changing platform. The new drink line called Oleato will feature olive oil infused lattes and iced espressos, as well as golden foam that sits atop cold brews. It'll make beverages richer and luxurious, according to Starbucks, as the product launches in 24 Italian locations today, with a rollout plan for Southern California later this spring. Of course, they go to SoCal with this. Oleato will also be a goodbye toast of sorts for Schultz, whose third round as CEO of the coffee giant comes to an end in April. Howard Schultz is kind of like Bob Iger for Disney. He's their champion. He's their GOAT. Whenever they try and move on from him, but they can't, and then they bring him back, whenever things get dicey. Oleato, I have heard of that, olive oil in your coffee and things like that. We'll see, if it ends up being richer or just tasting oily. I don't know. I'm not a barista. So I'm not one to speak on it, but just, some news when it comes to, a pretty large company, but also, just our daily lives. And for everybody who's a Starbucks aficionado, you'll get to meet Oleato soon. In terms of today's markets in Asia, and again, I'm not sure where we are since this came out because I can't have up both Thinkorswim and stream on YouTube in 4K. Actually, on this machine, I might be able to. I'm on a different machine than my traditional laptop to make sure that we go without, any tiffs in today's masterclass. With all the people we'll be streaming to and everything we'll have going on. So I might be able to have it up here, but I don't currently, just out of habit. But in terms of today's markets in Asia, pretty much red everywhere except for in the U.S. here. In Asia, Japan down 1.3%, Hong Kong down 0.5%, China down 0.5%, India down 1.5%. The footy in London down 0.9%, Paris down 0.6%, Frankfurt down 0.4%. The Dow up 0.1%, basically flat. S&P up 0.1%, Nasdaq up 0.2%. Crude oil down 0.8% to $75.76. Gold up 0.3%, and Bitcoin down 1.5% to right around 24K. FOMC minutes. That's really the biggest thing, right? FOMC minutes today. In terms of what else is happening, we'll wrap up here with our rapid fire bullet point rundown. Existing U.S. home sales fade for 12th straight month. Norfolk Southern, ticker NSC, faces strict EPA order over Ohio derailment. Earnings preview: can NVIDIA manage a sequential upswing? Again, NVIDIA on tap in the earnings confessional, I believe, today. Bill Gates, AI is a threat to Google and will reshuffle landscape. Microsoft inks COD, Call of Duty packs with ATVI deal at critical moment. Basically, they're bringing Call of Duty to like all of NVIDIA's platforms. So I guess to like computers and not just the gaming system. I don't know. I've been out of the COD life for a while. I'm not much of a gamer anymore. Not that you know it's not fun. It's just I haven't found as much time. And I swore as a kid I was always going to play games, but oh, how the childhood dreams die in terms of, but I mean, they've been replaced and supplanted by adult dreams that are a lot more fulfilling. I don't know if I'd help as many people if I was sitting around getting bodied on Call of Duty all day because I wasn't very good. World's largest asset manager launches new metaverse focused ETF. Dillard's, ticker DDS, dives nearly 20%. Sheesh, as JP Morgan cuts to sell. Big buybacks from Baidu, ticker BIDU, and Jeep Dodge maker Stellantis, ticker STLA. And then Coinbase beats estimates, but monthly transacting users decline. New start: the last U.S.-Russia arms control treaty is in jeopardy, which is not something you want to see again, considering the fact that we have such high tensions with the East at this point. But we've got, an arms control treaty that I guess was in place to control a certain level of weaponry being produced or something like that by the U.S. and Russia. It looks like that's in jeopardy as we're basically at war with each other, fighting a proxy war. So we'll see what happens with that. JP Morgan also said that they forecast the market to drop over 25% over the course of the next few months. Is that within the cards? Yes, right. And that's something I've been talking about ever since we broke the weekly downtrend, is that we're in a spot where we get yanked right back down into the bear's cave. We're seeing increased credit card debt delinquency where people can't pay back their credit card debt. We're seeing credit card debt in the trillions, right? All-time highs for credit card debt. And we're seeing lows, right? All-time lows for household savings in terms of like recent history, the past few decades. So we're seeing lows in terms of savings, and then we're seeing all-time highs in terms of credit card debt. That is not good, right? That is a recipe to get yanked right back down into the bear's cave, and get yanked right back down into the weekly downtrend that we broke out of at the end of 2022. So keep your eyes open, and more importantly, make sure that you have the blueprint for markets. And if you don't, you know where to find that, right? But everybody have a great rest of the day. That'll wrap us up here for the pre-market rundown for February 22nd, the first day of the Market Blueprint Challenge. I'm feeling ready to go. I'm feeling warm. I'm feeling froggy. I'm feeling ready to execute. I hope you guys are too. Look, I feel like I might have to crank out a few push-ups or something. Listen, throw a 5 in the chat if I'll see you later on. I'm excited to, very, very excited to. Make sure you bring your expectations. You'll get, correspondence within the Facebook group of everything that you need. Make sure you're in that Facebook group. If you're not, email me, right? Or check your email. You've likely missed an email, but make sure that you are there. You're ready to go and ready to execute. I'm super excited to do so. Everybody have a great rest of your day. I'll see y'all tonight in the challenge. Have a good one. And also let me try and figure out how to end this stream from a different computer. There we go. There's the end stream button. All right, guys. Peace.